Okay, what's up, 50 folders? We're going to be going through the basic marketplace model, which is basically just a strip down of the large marketplace model that I just shipped. I keep getting asked by people to make something a little bit simpler for them to manage and also a little bit more affordable for their specific budget. And here you go. I'm going to start making simple versions for all my models. Let's just quickly go through how this model fundamentally works, okay? So what we're going to do is we're just going to generate registrations to your site, both on supply side and the demand side. These people are then going to convert into customers in the conversion sheet, and then you're going to start making money from them. On the cost side, you're going to have your staff and your general office costs. You're going to have some payment costs, which are on the expense calcs, and all of this stuff's going to filter into your P&L forecast. We'll add together your actuals into the P&L combined, and then we can check out your KPIs and some charts and other stuff. So why don't we start at the end so you can understand how this will all work, okay? So we're going to be generating registrations. In this case, it's going to be heavily demand-driven as opposed to supply-driven. And what we're going to be doing is picking out your starting number of demand registrations that are going to be signing up to your site every month, and the supply number. And then you can grow these over time just very simply, and you can see what the ratio of demand and supply is. And that can change over time if you like by changing the growth rates. And then just very simply, how much does it cost for you to get a registration on the supply side, which is typically more expensive than the demand side? When you times those both up, you know exactly how much it's going to cost you across all your marketing activities to get them. And then if you have non-attributable marketing spend as branding or messing around at conferences but not really getting anything specific from that, you can add additional marketing costs. You do that on both on the supply and demand side, and then you can look at charts to make sure things are trending in the right direction. Yippee. Now for conversions, once we get these registrations on the site, we're going to convert them into customers and create 3 avatars: Basic, Premium, and Pro. And so they're just going to be averages so that you can have a different profile for each of them. And you can do that on both the supply and the demand sides. We'll open this up, and we've got little summaries up here. And for the demand side, supply side, we're going to be setting up Basic, Premium, Pro, whatever, 20, 30%, 50%. They're all going to 70% of all your registrations are going to convert in the first month, so 70% of them. In the full model, you can tweak this so that the ratios will change over multiple months, but this is the simple version. We're going to add in your actuals from your actual sheet, and there's 2 ways in which you can calculate your churn rates. Either fixed retention method, which is easier for calculating things like LTV. There's some logic for it, but generally I think the percentage method makes more sense because people will be leaving 4% every single month, whereas on the month retention basis, if you say 12 months, and everyone basically just buggers off after 12 months. Then to figure out how many listings we're going to have from the suppliers, you can put in from the Basic, Premium, Pro, and if you want to change this over time, you just copy that, set it up here. Whoopsies, I've done something wrong. And so you can, whatever, for some reason it's going to start going up to 5 listings per supplier, sometime in the future. So you can do all these kind of things if you'd like to. And then basically the same thing on the demand side. Where your registrations converting to Basic, Premium, Pro people, what percentage of people are converting, add in your existing demand side, and then you can pick your churn rates again. And we'll lots of calculations, which then do the math for you to create the summary at the top. Now we're going to start making money from our demand side. We've got transaction, affiliates, members, listings, and ad revenues, and we can see little charts of where that money is coming from, and we'll just do the calculations on them. So if we ungroup this up, we'll see 5 different revenue streams. Now if you want, in the control sheet, you can actually determine which ones you want and don't want. You can turn them off, yes and no, depending on what you want, and therefore it'll null it out and they won't flow through the model anymore. So back to here, you can see the summary of all the key stuff. So a lot of it's generated from not that many assumptions. So how many transactions per month will a customer do on the demand side? What is the average transaction price for calculating your GMV? What's your rate? What percentage are you charging? Then there's calculations for them. For affiliate sales, you can be, well, are you doing CPAs, CPC basis? That what is the percentage of your registrations that will be doing those customers? And then calculating if you're making a rake and how much you're making CPC and generating that sort of revenue. So if you're like say like a fashion app and you're driving people to buy whatever, some handbag on another site, that's probably more like what you're doing, and you calculate your GMV in a different way. It's a purely transaction platform, like Uber. So if you have a membership revenue for whatever reason, I don't know, for advanced analytics, some bullshit that Upwork is now making me pay for, you can set up what the fee is and what percentage of people in each of those 3 packages will do. For listing revenues, you can release new features in the future, like priority listings or extra photos or whatever it is you want. There's 7 types you can add. When your tech team are going to launch them, then what percentage of your base are going to be signing up for them? And that's going to generate revenue for basic, premium, and your pros. And then finally for ads, you can talk about specific or kind of general ads that you're going to get with CPMs. If you understand advertising, it's important for your business. You'll understand this. I'm not going to explain it in too much detail, but you can figure out how many impressions or page views you're going to be getting, what kind of inventory will be sold, what your CPMs are going to be for them, depending on the type of ad units you might be selling. And then you can figure out what the calculation will be working for ads, and just making sure that your registrations or versus, say, your customers could make more sense, make sense for your specific business. And then you get all these charts and you can see what's happening. So the supply side is basically exactly the same thing, just less revenue streams. So we've got the transaction revenue, we've got membership revenue, and we've got listing revenue on the supply side. Now this stuff is all going to go into your P&L forecast as revenue, right? Supply side, demand side revenue. Now of course you can have costs. The vast majority of done this is in the staff sheets. So you can see G&A, R&D, S&M, and your COGS costs. And most of it's done in here. Obviously, the full version of this has a lot more automations, with channel sales staff and automations of sales teams and all those sorts of things. But again, if you want a simple model, this is the one for you. So we're going to pull in the links from other sheets. We've got the summaries of what the costs are, your head counts, etc. Put in a generalized assumption for your payrolls and taxes. Then forecast, well, how many people do you have right now? And then as you add new people, they'll have CapEx. So we don't want to add new CapEx for existing people. And so, I don't know, say at this point, we're going to add 5 new developers in month 7 or something. What is the average salary per category? If you have bonus costs, if you're going to increase them over time, say when you hit your seed or your Series A or something, the date you can increase that salary. So we can see that here, the salaries are increased because we've hit that increased date. And we've got all sorts of formulas which do all that fun math for you. And we're using averages here because you may not know, and we're just making simple projections here because you probably don't know. But you basically get the one result that you want without too much effort. So onboarding costs, laptops and stuff, chairs, whatever. If you're doing virtual, hey, who cares? You could just, whatever, delete them. And therefore you don't have those costs anymore. But whenever you hire people here, you see we've hired 2 people. They cost, whatever, 5K each, something. That's going to be like 10K. Then you have your generalized costs, because who cares about dealing with how many pencils people are going to be having. So just how much does it generally cost you for a G&A staff, office manager, whatever, say $150, but in future it'll be $200 a month, times that by the number of people within each category, and you get the result. Now for everything else, if you want to be specific, like you've got auditors and accountants or McDonald's or flyers or whatever you want, you can put in some generalized costs. You can add in more complex formulas if you want into here, but it's basically as a catch-all for any other cost you want. So that's really simple, and it generates all this stuff automatically for you. So it's the absolute bare bones I could think for someone who's kind of busy, doesn't have lots of assumptions, just wants to kind of get it done. This is the fastest way that you can actually get something which looks pretty serious, but without having too much effort to do. I stripped out a lot of the other expenses like emails and whatever tech costs. I just assume you're going to bake them in, but of course you're going to have payment costs, which could be 12% of your revenue, for example. So you can have credit cards, PayPal, bank transfers, payment delivery, whatever for some reason. These will automatically populate if you have a percentage contribution coming from different charges. Do you have monthly costs? What is percentage transaction fee or the fee per transaction? God, don't you love these people charging all this money? And then this will times against the transactions you have, and basically figure out what your payment costs, which are again going to go into your P&L forecast. So why don't we have a look at this? In your P&L actuals, these are your actuals. You have them, you don't have them. If you don't have them, you can set a formatting date for when your actuals start, when your forecast starts to the same date. So if they're both dates are your forecast start, then you don't have any actuals, and there's no need to fill in that sheet. And you can also set your year end, at which point your taxes and accrued salary costs will be paid out. So you're going to fill in your actuals. It's almost exactly the same as the full version. So you're going to have supply side customers and demand side customers, which are going to be added into conversion sheets of calculations. You can get your GMV, gross transactions, the amount of revenue going on the supply and demand side, if you've got discounts and vouchers and cancellations and bad debt, what your COGS costs and your payment costs are to date, costs across pay, the demand side and supply side, any offline, whatever, non-attributable marketing. Then your summary G&A, R&D, S&M costs. And then we're going to do a conversion from your accounting to your cash flow, which will be paying out on your year end. And if you've raised any money to date, then obviously you want to add that in so that you have cash. Now the P&L forecast is exactly the same format, although in here there's only like 3-4 numbers you need to fill in, which is if you have discounts and vouchers, cancellations, or bad debt and credit card fraud, as well as if you plan on raising money at some time in the future. So that's literally it. And so every single thing that's coming into here are basically just links to all the other sheets. P&L combined, again, exactly the same format. It just pulls in the actuals and the forecast depending on when you've set those dates to be done, and then you can see it flows month to month to month. And so it's great here with conditional formatting to know when this is your actuals and when your forecasts start. And you can make sure that those are kind of flowing through and sort of look consistent. Okay. P&L for deck is just a sheet I made for shits and giggles. These are obviously your actuals here. You have to put in your own calculations for them. But if you want to put this, send this to someone, put it in your deck, or just look at it for pretty purposes, you can do whatever you want with the sheet. Nothing's linked to it, so feel free to put in pictures of cats if you want. No one cares. KPI sheet is what I use all the time. All right, so you can see the grouped up version here, the CAC supplies and whatever. You can ungroup it and get into more detail to see how everything is actually calculated in lots of detail. So I try to make it easier for you to actually see how calculations are being done across all your avatars as well, basically in Pro. So I use this a lot to make sure that the numbers in business make sense. So if your LTV CAC marketplace calculation is going like 1,000 or is like -10, you kind of know something's wrong and you need to balance out your costs and your revenue generating, right? So if these ratios sort of make sense, your model makes sense. If they don't, you've done something wrong, in which case you need to go back in your assumptions and have a fiddle around. Okay, so there is pretty much every single ratio I could think of that can be done given the assumptions that you want to put on in this KPI sheet. Then all charts, I think there's 36 or something of them from the various sheets, are in here so you can have a quick review and make sure everything that you forecasted making sense. Now, if you want to be figuring out what the indications of your model are on how much you plan on fundraising, or you want to figure out how much money you should be raising, this is a source and use sheet which will help you calculate that. It's also useful because I've got a checksum down here somewhere, which will tell you if something's out of whack. And so we can see that when numbers make sense, in which case so does this model. And this will generate charts and things that you can potentially use if you want. And you can use these assumptions to figure out if these numbers are making sense. And I've got a blog which actually explains this in a lot more detail that you can see. Okay, so that is a quick high-level walkthrough for you to understand whether or not this model is for you or not. If you're looking for something with some more automations, a little bit more weight to it, check out the full version of it. But if you're more idea stage or like super early stage company, this is probably just enough for you. I mean, you can see it generates quite a lot of outcome with not too much input. You decide, guys. I make these things to try and help you a lot. So if you've got questions, feel free to reach me on the live chat or send me an email if you've got questions about whether or not this is for you, and I'd be happy to help you out. All right, guys. See you. Keep hustling.